Hello, folks. Brandon Chapman with you today. It's another video for Monday, March 20th, 2023. As we look at the market, we are finishing near the high of the session today. So the question becomes, what's going to happen with the Fed on Wednesday and their statement? How will that impact the market? So we'll kind of look at sectors, specifically what's going on today with gold, as appears to be that there's some trade or investors looking to capitalize on maybe more of a dovish Fed announcement. So we'll kind of look at that option activity and peruse the market as well. And we'll take a look at Synchrony Financial and Macy's on the bearish side. So if you look at the S&P, we're rallying today. If we look at the VIX should be falling, which of course, well, it is. So we're back down to 24. If we catch a bid here, so we start to see the market edge higher, we want to see the VIX progress back down to 18. Now, part and parcel with that, you should see a rise in the back month volatility, meaning that the 3-month VIX should be outpacing, the VIX should be outpacing the decline relative to the 3-month VIX. We're currently about 1.07. What that means is that the 3-month VIX is about 7% higher than the spot VIX. We would love to see this kind of rally back up here above 1.2, and that is indicative of maybe a market top. Because look, we've had a pretty bearish week, particularly in the financial space. If you look at financials as a sector, down 12.5% in the last 3 weeks. It's the worst performing sector out there, along with energy. And so again, there's a lot of parts of the market that are maybe a bit oversold. Can they catch a bid? This is something I posited on Friday. And you notice today the two top performing sectors are energy and materials today. Materials, of course, gold stocks, precious metal stocks being a part of that materials sector, snapping back today after some weakness end of week, and particularly energy really took it on the nose as oil broke support last week. So we're seeing this kind of snap back in the oversold parts of the market. We're seeing the stuff that did well in terms of technology. Cyclicals did okay, being some of the worst performers today. And utilities basically trying to figure out where are interest rates going. So if we look at TNX, this reflects the 10-year Treasury yield. Right now we're sitting at support going back to the last couple of months. Now we've seen it come down from 4%, now close to 3.5%. That's a 0.5% decline in the 10-year yield. And we're now wondering, well, what is the Fed going to do on Wednesday? Well, if we look at interest rate expectations vis-a-vis Fed funds futures, the current rate's 4.5%. We're looking at a 76% probability that they're going to raise a quarter point. So that begs the question, are they actually going to do it? It seems like a foregone conclusion today, but what's going to happen between now and Wednesday? Well, we saw over the weekend that Credit Suisse got bailed out in a sense, not exactly the bondholders of Credit Suisse, basically UBS acquiring them. You know, we're starting to see, okay, have they done enough? As the Fed, through their swap lines with other central banks, are they doing enough to kind of quell the immediate kind of liquidity concerns that we have? Well, if we look at the euro/US dollar, what you'll see is the euro has been generally breaking higher the last few days as the dollar's shown weakness. If you look at the Aussie/US dollar, again, over the last week, we've kind of stabilized a little bit, right? We've edged higher as the Aussie's outperforming the dollar. And this is generally true for a lot of foreign currencies right now. The pound/US dollar forming a higher low up the last several days, back to getting close to multi-month highs at about 125. And so the dollar's kind of weakening. And of course, this is helping or benefiting gold prices that have shot up over the last couple of weeks here. And in fact, we could go back to February 27th, where, again, there was significant option activity bullishly in the gold space, specifically with a stock called Bear Gold, GOLD. So we saw a little bit of a run, a pullback, and then we've seen a rip because the dollar has been weakening. So everything begs the question, what's going to happen on Wednesday? Are they going to pull the trigger, raise a quarter point? But more importantly, they are going to give their expectations for interest rates, meaning we're going to get a dot plot for where the interest rates are expected to be in the future by the voting members. So we're going to get a sense of what their outlook for interest rates are. So a quarter point may be a foregone conclusion, but we may be one and done. And again, you can kind of look at the various periods here on the CME website and see, okay, what are they expecting for May and so forth, right? Close to a 50% probability of another quarter point. So the question becomes, where are they going? Are they going to peak out at 4 3/4, 5%? Or again, are we going to start to see by the end of the year rate cuts? Well, guess what? Right now, the market is pricing in greater than a 50% probability. We're lower than where we are today. So we're pricing in rate cuts. Does the dot plot change those expectations? Well, a lot of the dollar's strength or weakness does hinge on those expectations. And obviously, if the dollar weakens, you expect gold to go higher. And so again, we're going to go through a number of different gold option trades today, expressing maybe some optimism that gold is going to move higher in the coming weeks or longer. I actually missed typing in GOLD on my list as well. So let's circle around. Let's take a look at oil, and we'll come back to gold here. Black gold has been down, broke support as I mentioned last week. But again, how far can oil go down? Our production concerns there, right? Are we building inventories? We're going to get some data on Wednesday with regards to that. But we did break a pretty key level of support. But we do have the potential backstop of the federal government replenishing those reserves that they had released, with a promise that we start to stay down this area. So my guess is oil prices don't go down a lot, but this was a trade last Tuesday that was starting to flip more bearish, and one that I reviewed with our subscribers at TheoTrade. We looked at a downside spread on XLE specifically. Again, and we started to see that break out or break to the downside. We went over it on the 10th, for example. So again, we saw a big drop last week. We're kind of hovering around this 61% retracement area. And today we're seeing some bullish trade come into Oxy. Now, again, if we're angling towards recession, which if we're expecting significant rate cuts by the end of the year, we're suggesting we're entering recession. This isn't exactly the most bullish time for energy, but again, a lot of stuff's oversold, and we're seeing that snap back today with XLE being the second best performing sector. But Oxy, this was a weekly option. So again, if we get kind of a dovish Fed that does kind of, push the envelope a little bit in terms of providing more liquidity to the market, a weaker dollar, this can create a little bit of a catalyst. And notice today, 34,000 contracts traded on the 24 March 23 $60 call option on Oxy. Of course, this is Buffett's, favorite stock. But again, do we start to break through 60 and create kind of a gamma squeeze, pushing us back to 63.50 in Oxy? Again, that's certainly one that kind of looks like it may be poised for a move. Again, if we probably need some help on Wednesday, but this expires at the end of the week. As we look at gold and silver, right? Gold has made a nice run. Silver's also done relatively well over the last couple of weeks with the dollar's weakness. Well, if we look at a stock like Pan American Silver, PAAS, this stock is a bit overbought in the near term. However, again, if we start to see a weaker dollar, silver prices push, we could readily see Pan American Silver back to its prior high at around 1927. The trade today was actually for an April expiration. There's no weekly options on this one, but it's out of the money here at the $21 strike price, mostly bought. Again, relatively cheap options out here, but again, more likely if you can construct a spread that's more beneficial, buying the lower vol, selling the higher vol in here. So it does have favorable skew for a long call vertical if you're to buy at the money and sell out of the money. But again, this is indicative of maybe the potential for this thing running to 21, which puts you close to that, 130. That's not what I want to measure the retracement here. But, if we take this as kind of that initial kind of wave here, maybe push you towards 22, maybe 23. If we, at least the near-term projection is 21 in Pan American Silver. Wheaton Precious Metals. So again, this is to be wheat, silver Wheaton. But again, this has made a huge move, retesting prior highs. And again, this isn't exactly the most comfortable position to want to get long Wheaton Precious Metals. But what if the Fed does come out? Again, there's a thought that maybe that the dollar continues to weaken, gold prices, silver prices will continue to push higher. And this is on a May expiration down here at the 50 strikeout here. So again, some buying of out in the money calls. So again, this still creates an opportunity to do a long call vertical rather than going out and buying straight calls. But the idea is, can we be overbought now and get even more overbought? The answer is yes, but it's going to take a dovish result on Wednesday and dollar weakness to really drive gold and silver prices. So I realize for many people, this may be a bit of an uncomfortable position given how extended we are in the near term. One of the ways you can combat that is like out of the money call verticals, or even maybe sometimes, it's just kind of saying, look, if I have a low probability trade, but low risk and very high reward, it can work out relatively well. But as we look at GLD here, this was kind of a little bit of confusing one. There's a lot of stuff happening here. But when we let this thing load, you'll notice again the 205, 200, 195, 185. Now, at a minimum, this is a roll. Likely it's a spread that's being rolled out. We won't really know until after the open interest is updated, but maybe a 185 and 200 getting rolled out to a 195 and 205. But either way, we're kind of opening up this 205 area here. And again, it looks like a big potential move by when? By May. That's 60 days out. So if the Fed in the next 60 days really starts to hit the easing button, begins to look at potentially cutting rates, maybe they don't follow through, maybe the dot plot isn't where it is. The point being is if the dollar weakens because of the largesse, the monetization, the printing, the lower interest rates by the Federal Reserve, we could readily see gold back up into this area here at 200 to 205. So that 185, 200 was actually put on last week or the week before. This is just nudging it out and trying to capitalize even in a higher move while at the same time taking some profits out of the trade. As we look at GOLD today, this is Barrick Gold, second largest gold company by market cap. Again, if we look at and measure this retracement of this prior downtrend, we're at about a 61% retracement right now. If we break through this, could we see $20? Absolutely. And this could happen very quickly. You notice how we held on to the 61% retracement. So this is a typical correction. We're seeing the breakout going the other direction, high volume to boot. And again, we continue to see, starting back around the 27th back here, we continue to see bullish trade in GOLD today as well. So if we look at gold, a couple of bigger trades, one for the April expiration here, out of the money at the $21 strike price. And if we also look at the June expiration, another big tranche here at the $21 strike price. So again, going back to the charts, $21 has you up here. So the idea, we may create some momentum if we get particularly take out 1850, expectation rolling back to 20, and maybe start to see a little gravity pushing us to 21 or higher. But again, it gives you a little short-term move. All this is predicated upon what? Wednesday being a pretty dovish announcement. If not, and the announcement ends up being more hawkish, maybe the dot plot's not exactly as expected. Expect to see gold stocks start to come in. Now, if we see significant pressure in the market, we may see again repricing of the Fed cutting rates, and they may just set aside the dot plot put out by the Fed. But again, this could be a pretty volatile week. And so we're looking at the trades, just a lot of trades being put on today. Another one's SVM. This is on the silver side of it. But all these produce both gold and silver. But the idea is this seems there's like some expectation being priced in today that the dollar is going to weaken this week, and we're probably going to see more of a dovish result from the Fed, maybe a surprise. SVN, this was as we're kind of breaking out today, we had good volume today. We had good volume yesterday. We look back here. Let's go back 3 years weekly. We kind of take this downtrend here, draw some fibs. You'll notice about the 38% retracement near $5, $5.50 to $6.50 as kind of a retracement area. This is kind of our first leg. We're catching a bounce here. Notice the confluence around what? About 440 to 480, and secondarily around 6 to 650. So again, the strength in this initial wave back here starting, back in September certainly indicates there might be a potential, a move or even a correction of the prior downtrend, ranging from anywhere from 450 to like $6. And so as we look at the trade today in SVM, this is only out there in April, a few weeks out, but you see the significant call option activity, mostly bought at the $5 strike price. So if we can get some run to 5, maybe break 5 in the coming weeks, of course, that's a very, very big move in it. But again, how dovish can the Fed get this week? And you could see a big propulsion in gold and silver stocks as the dollar weakens. Now, the last couple of trades I'm going to go over here today are on the bearish side, because here's the deal. Are we going to correct the issues in the banking space? We might temporarily alleviate liquidity issues, but eventually we're going to have solvency problems. Again, this idea, if we're going into recession, everything's being priced in the thought that by the end of the year, we're going to be in recession. What's going to happen with defaults? A lot of companies laying off, a lot of companies freezing hiring, like Apple, for example. So what is going to happen with a stock like Synchrony, a lender, right? Revolving credit, doing loans for like furnaces, all this other stuff tied to housing. If housing market cools, it's a crazy market right now. What's going to happen? Are people going to continue to pay their credit cards, right? That kind of thing. So as we look at Synchrony Financial at the moment, we are oversold. But remember, it's a financial stock, right? Not exactly a banking stock, but financial. And if we start to see a pickup in unemployment and the debt cycle, is this likely to break 28? Boy, all we got to do is look back at COVID and you can see how fast things can unwind for a stock like this. Could we see a $10, $12 handle in Synchrony? Absolutely we can. And again, it's the question of maybe not if, but when. So it's kind of interesting with today's trade in Synchrony. It allows for maybe a short-term bounce in lieu of the bigger picture. So we go to the trade tab here. We're going to go out to the Jan expiration, Jan 2019. And we're looking at 2,000 puts mostly bought out here. Could this be a hedge? Absolutely could be a hedge. Doesn't matter. No, the answer is no, it doesn't. Okay, so we're looking at $15 out here for Jan 19, 2024. And so again, this is kind of interesting. The idea is we may go up and down. It's a lottery ticket out here thinking what? We're probably going to go back to lows again. By when? By January. And right now we see the Fed funds rate futures pricing in a recession. The Fed's going to cut rates, 1% by the end of the year? Again, things are probably going to become pretty unpalatable economically. And Synchrony, Ally, a lot of these companies are probably going to experience some weakness. Now, here's the deal, though. Buying a way out of the money option like that, I'm not sure that's great. You could construct a spread. We see rising vol here. You could buy the lower volatility and sell the higher volatility option and kind of pick, how much downside you're expecting here, starting with basically at the money at 28 and selling a lower strike price, 28.25, 28.23. You're buying the lower vol, selling the higher vol, making that spread cheap, giving you some edge. So you don't have to exactly target 10, but you could using that sort of spread strategy. Finally, Macy's. So Macy's, again, we're talking about, department store. I tried to return something to Dillard's this morning. I ran over there really fast, thinking they open at 10, and they open at 11. Crazy stuff, right? Macy's. We're seeing the initial leg lower here, right? The second leg carrying us to 161. We rallied back up again. We're coming close to the 223. But as you look at the retracement, we're seeing a very key level here at around 18.5. That's the 61% retracement of that prior uptrend here. What we're looking for, if we break out of this little consolidation phase, we're looking at this thing rolling back to 15 again, which if we see more layoffs, we're trending towards recession, yada, 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 you would expect this stock to see some weakness. But near term, just breaking out of this little consolidation we're seeing right now may have us at 16, possibly 15 fairly quickly. So we look at today's trade on Macy's. It's not out there very far, but could be impactful. A 31 March. And of course, earlier today, this was not quite in the money as much as now, but a $19 strike price, 3,100 contracts there, mostly bought. Again, seeing the pressure that may be being placed here looking at a downside breakout, downside expectation. This is one there's been a couple of bearish trades over the last couple of days or a few days here on Macy's. Well, hey, folks, we got to wrap it up there, but I hope this gives you a little bit of a direction and a warning. Of course, again, Wednesday, the FOMC statement. Probably don't load the boat here beforehand, but if you want to take a little bit of a wager on a big move in the market, you know, gold may give you some direction, or maybe retail like Macy's or financials like Synchrony. Notice here we're looking for about a 100-point move by the end of the week. And of course, by Wednesday, we're looking at $75. So expect to have a bumpy road this week and some volatility. We'll see whether the VIX resolves itself by moving lower towards 18 or breaking out if the Fed comes out more hawkish than expected on Wednesday. And it's a pleasure being with you. Catch you back next week in the video. Thank you.